Hello and welcome to this edition of Closing Trades, right here on ET Now with me, Aisha Faridi. And it's turning out to be a little bit of a range day. I mean, to think of it, you're not really seeing any knee-jerk reaction whatsoever after Operation Sindoor got launched. The markets have been in a consolidative zone for the past couple of trading sessions. That was the trend that we picked it off from start of the week up until now. And that story pretty much continues. In fact, if nothing, we've been trading in a very narrow band. Almost just about 1% from the high to the low of the day. And of course, a lot of individual stock-specific movers are what you're currently seeing in the market. I mean, look at Gokuldas Exports, for instance, Arvind Limited. These are all sensitive to the UK India FTA impact. Tata Motors, not just after the trade deal getting signed between the two countries, but also an overall boost for auto sector, given that automobile sector can now trade and can see an actually uptick because of the reduction of tariffs between these two countries. And of course, the shareholders have also approved the CV business spin-off. Other than that, Paytm, that's the big story of the day. The company has finally turned positive on an ESOP EBITDA basis. So that stock is holding up very well. In fact, the management is now expecting Paytm to turn PAT positive come the next quarter. And you can see that cheer reflective on the stock price, which is currently holding up 7%. BSE up another 7% in trade. There's Piramal Enterprises, 7% higher. IIFL, an uptick of over 7% in trade. What about the breadth of the market? And I think the big news is over there, because after what started off with a bit of a tempered move, finally the breadth is open in favor of the advances, at least within the F&O pool. You've got a count of 173 now standing to the advances. Within the large caps, other than Tata Motors, there's also a Titan, Shriram, Geofinance, Adani Ports, Bajaj Finance. So a bunch of these stocks which are holding out and supporting the market today. But Paytm, we were just talking about that. That's come out with with its numbers. Let me take it across to Gaurav and help dissect the numbers for us.
When it comes to Paytm, when we look at the stock performance, it is up in trade today, and there are two main reasons. First is that Paytm has actually turned EBITDA positive if we exclude that ESOP cost, and second is that the management has now said that Paytm will also turn profitable in Q1 FY26. So first, let's understand the numbers. When we look at revenue, that increased only by 1% on a sequential basis, but let's not forget that in this quarter, Paytm actually reported UPI incentive gain worth 70 crore rupees, and as a result, when we talk about the contribution margin, there we have seen an uptick of around more than 170 basis points on a sequential basis. Other than that, a key highlight for this quarter was that ESOP, and if we exclude the ESOP cost, EBITDA has turned into a positive number of around 11 crore rupees. And if we include that UPI incentive of 70 crore rupees, now EBITDA positivity is as high as 80 crore rupees for the quarter. Other than that, when we look at profitability for the company, now although company has actually reported losses of around 22 crore rupees, if we exclude the exceptional items in this quarter, let's not forget that in this quarter, Paytm actually reported exceptional item worth 490 crore rupees regarding the ESOP cost and around 30 crore rupees towards the other impairment charges. And as a result, when we look at the actual reported number for profitability, Paytm reported losses of around 545 crore rupees. When we look at the numbers, those are actually higher than what the street is expecting in terms of EBITDA and profitability. And lastly, company is also saying that the profitability, the losses in terms of the profitability of the company has now gone down, and that is actually going to be sustainable because reduction in ESOP cost is going to be there. Other than that, operating leverage will also play out in terms of profitability. And the key highlight once again is going to be that Paytm said that they will turn into a profitable company in Q1 FY26. In fact, they have also reiterated their growth guidance of around 30 to 35% in terms of top line and around 10 to 15 to 20% in terms of EBITDA. So definitely a very positive commentary from management also. And on back of this, we saw a very positive uptick in the stock price today.
All right, thank you so much for that, Gaurav, for outlining the numbers that Paytm actually posted, and the stock is on a tear since the word goes, 6.5% or rather almost 7% uptick coming in for Paytm. We have our experts joining us this afternoon. We have Deepan Mehta as well as Kunal Bothra on the show. Very good afternoon to you, Deepan, as well as Kunal. Thank you so much for joining us in ET Now. And Deepan, there are a lot of news pointers for us to focus on and for the markets to focus on, but there is only one word that goes along with Indian markets at this point in time, and that has to be resilience.
Yeah, right. I think nicely put by you that yes, Indian markets are showing resilience. But look, we have seen these kind of events before So the uncertainty and the surprise factor is not there. And I guess that now it'll be business back to usual. And whatever has to be done has been done by the government. A fitting reply has been given. And the news flow will now start move back to rather the market will now focus on earnings and fundamental related news flows. And of course, there's this Trump tariff hangover which is still there, which we need to deal with. But at least this particular threat and uncertainty seems to have got resolved for the time being.
Right, so that sort of an uncertainty is actually out of the way. But also there's another factor that everyone's watching out for is the fact that what is happening on the tariff front. Now you have the India-UK FTA as well, a crucial one at that. You have all the stocks actually reacting to that. And also the fact that in the next 2 weeks or so, Trump has indicated that he is going to go ahead and sign more trade deals. So it looks like that sort of a factor also should actually move out of the way, isn't it?
That's right. I think on the whole, very constructive on the market for two reasons. One is that normally monsoon is a great season for stocks. And secondly, I think in a couple of months' time at the outside, you will have clarity on Trump tariffs. And that way, I think businesses can start getting back to normal, do their planning in terms of export markets they want to pursue, supply chain changes, whatever is required. And good monsoon, cut in interest rates, lower TDS on salaries, which will start flowing in from May itself. All of these things could lead to better earnings growth going forward. Frankly, so far, I've been a bit disappointed with the earnings which have come through so far, but I think that may change in the September quarter or so. So, as I said, broadly constructive on the market, and I think that all corrections are good opportunities to buy.
Dipan, so what is the view on that? Do you think that while we've recovered all through April, it's going to be back to sell in May and go away, or do you think that may not play out this month?
No, I never sell in May and go away. And it is always my gut feel that May is a good month to buy because June, July, August markets generally rally. I have this theory that when it's raining outside, markets generally tend to do well over here. And there's a logic to it also because all of the businesses do tend to slow down and money flows into our market. So I'm not of the view that one should sell off at these levels. As I said again, we're very positive on the market and all corrections are great opportunities.
I never said it was you. It was actually London traders who first coined it, and seasonality also depicts so. But Kunal, what is your own sense? Does it seem like this consolidation is for a move up, or do you think the market could give off a little bit of gains that we've accumulated all through April?
No, I think it should be the former where I would believe that there could be a chance that the markets may actually start to move up. Now, just to add the one factor for me, seasonality. Over the last 8 or 9 years, over the last months of May, we've actually seen alternate seasonality, alternate behavior for the Nifty, where over the last 8 years we've seen 1 year to be positive for the month of May, the other to be negative. And the last year, the month of May, we were actually down for the index. So maybe that could be an indication that this time around could be positive. The other second most important factor for the month of May seasonality is that the second half of the month of May, potentially over the last 7 or 8 months, have always been positive for the index, where we've seen recovery coming back into the benchmark indices. And Bank Nifty apparently has actually done reasonably well in the previous attempts. So that, I believe, could be the standout feature for the markets this time around as well. You're already seeing some strength which has emerged into the banking index. The market breadth is opening up. Yesterday, the return ratio was almost, I think, 1:4, 1:5 in the favor of declines. Today, it's slightly in favor of the advances, 1:1. But I believe that that's giving an indication that the market volatility could settle down and the market breadth could start to open up. So all of that indicates that we should be moving up higher potentially over the next few weeks.
Right. So, Kunal, have you spotted some of the stocks that one can look at actually, given the fact that we should be bracing ourselves for some good up move in the markets going ahead?
Yeah. So, as I said, banks could be an interesting play. There could be a chance where maybe the private sector banking names like ICICI Bank, HDFC Bank, I think they could start to move up higher into the second leg of uptrend. We've seen very good price action coming out from two important packs. One, of course, is Reliance Industries itself. That stock has done reasonably well, crossing back about the 200 DMA and the 1400 mark, which was a major resistance. And the second is the OMC pack, where you've seen BPCL, IOC, HPCL. I think stocks have given a classical price volume breakout. So expecting the move further to broaden as well as strengthen into these stocks.
Just want to look at some of those capital market buzzers in trade. Take a look at BSE. That, of course, is the star performer in trade right now. That holding out very well. It came out, of course, with its numbers as well. And it saw revenue uptick on a sequential basis over 10%, 152% jump up on the EBITDA, and these are all sequential numbers that I'm reading out. The PAT as well saw a solid 126% uptick coming in. Deepan, we've often talked about the capital markets theme, and when companies like BSE deliver the way they do, or for that matter, even NSE when it came out with its numbers, you get more and more convinced about this particular theme. But do you think it's time to deconcentrate and move away from exchanges? Any other themes within the capital market space that you find interesting, perhaps?
Actually, you're right. I think more than capital market, the investment theme is financialization of savings. And if you want to follow that theme and stocks which emerge out of it, there are, of course, the stock markets or the exchanges. Then there are the asset management companies. We have a couple of registrars also which are listed. And then there are the wealth managers. So that encompasses the entire investment theme of financialization of savings. And of all of these sub-segments, we are most positive on the wealth managers. I think they are great long-term growth dynamics, secular growth stories, limited cyclicality in their revenues as well and profitability. And more investors, HNIs are going for advisory services. And these companies tend to do well in a good capital market or good bull market as well. And I think they are reasonably valued. So wealth managers is where our focus is. Of course, exchanges will do well from time to time, but they are highly cyclical. And at these valuations to buy BSE, I'm not so sure. But amongst the exchanges, we are most positive on MCX, where the options volume is still to start reflecting in the top line, bottom line. And that also, I think, is a good opportunity and a good growth story from an investor's perspective. Having said that, these are companies in which we and our clients are invested in, so our views could be biased.
Right. So MCX is the stock that actually looks better when you talk about the exchanges. BSE, definitely that one has seen a spectacular rise in Kunal, in excess of about 70% since the March lows is what the returns that BSE has given.
Yeah, and I think if you add today's 5-6%, it should be more than that.
All right. So what's the way forward? Do you think that it will hit a pause button now, given the fact that it's already seen a sharp rise, especially at a time when you have the markets actually see a sharp correction and then finding its way back?
So, on the stock, we generally feel that maybe the stock could just about continue to trend up higher. Maybe the pace of rally could just about, drop down a bit, because now what's happened is that many indicators have started to come back into the overbought zone. So we are not into that overbought territory. There are signs that many of the indicators have started to come back into neutral territory for BSE, even though the prices have moved up higher. So that's a classical case of a divergence on the indicator front. But that doesn't mean that the stock would go into a sharp correction. But I sense that it could now just about drift gradually on the upside. So maybe over the span of the next 2 to 3 weeks, I would actually expect the stock to say come closer to that 6,800, 7,000 mark. But that could probably happen with a lot of volatility and very minor phases of trend. So still remain bullish on BSE largely on the long-term charts, unless the indicators, they start to show signs of a major reversal, which I don't anticipate as of now.
I just want to play that soundbite as well that we had from Karan Tarani earlier today on the impact of UK FTA on the alcobev industry. Of course, cases in point, largely the one sensitive one would be United Spirits, wherein there is going to be definitely some margin pressure coming in eventually because of the MRP price reduction. In fact, let's hear out the expert opinion that we got earlier today.
MRP will see a cut as far as duty paid Scotch in India is concerned, but the fall is not more than 10 to 15% in our assessment as of now. Now, what this does is that this will obviously give a lot of fillip to Scotch volume growth. It will kind of get the prices of upper prestige and the entry-level luxury segment closer, in terms of gap. So United Spirits will be the big beneficiary out of it as far as volume offtake is concerned. But I think if you look at their business model, the bottle and origin, the bottles which are there, which in terms of the parent arrangement with Diageo, the profitability and the EBITDA margins are capped there. So this will give fillip to growth, but as far as profitability is concerned, it's going to have a negative impact in terms of margins, which means that effectively the net positive impact will be very small for United Spirits.
The UK-India FTA is a mixed bag for our industry. We had definitely recommended that there could be a drop because we have been in negotiations and the government has reached out to us. The 75% reduction will be obviously helpful to all the importers of bulk scotch because yes, a lot of Indian blended whiskies do put in bulk scotch. So all the manufacturers and marketeers of IMFL will have a benefit in terms of the bulk scotch. However, the bottled in origin drop without a concomitant minimum import price kind of a cap may and could lead to a surge of cheaper scotch whiskey, flooding our country. And if the same template is followed for other countries, especially in the EU as well as the US or Australia or New Zealand, where wines are a very predominant category, then the Indian wine industry could get adversely impacted because no one gets bulk wines per se, but they will definitely get bottle in origin, and that could create issues.
Dipan, I want you to come here on the Alcobev impact of the UK FTA trade deal getting signed, because what we're understanding is that there will be growth because the MRPs are going to get cheaper and there will be that volume boost, but that growth is going to come in with an impact on profitability. Tell me, how are you reading this? Dipan?
Sorry, I didn't get the question about the...
No, I wanted to understand as to what the liquor industry is going to be staring at and the impact of the UK FTA, because while volumes may actually get a fillip, but it will be at the cost of margin and profitability for sure.
No, Aisha, it's not going to make a very big difference to the profitability or the volumes. When it comes to the alcohol industry, the critical variables for the earnings is the state government policies on distribution and pricing. And there's a lot of interference from state governments on these counts, which have a material impact on the performance of these companies. So while long-term trajectory is great, I think there's a lot of earnings volatility because, say, one state may decide to not offer a price hike or may put some curbs on distribution. So all these challenges keep coming up, and really the managers of the alcohol industry have to wade through a lot of compliance-related issues, which is always quite challenging. So I think it's generally positive for the industry as a whole, and it will increase the consumption in an indirect way because costs may go down. But as I said, I think for the listed players, I don't see any material change in their earnings estimates or their growth trajectory.
Could spot this as an opportunity and perhaps hike taxes. Let's see how this entire story plays out. But we've got Nagaraj Shetty as well joining in on the show right now to talk about his sense on the charts. But Nagaraj, let's talk about the Alcobev stocks. United Spirits, Radico Khaitan. What's your reading?
Hi, good afternoon. The stock Radico, in fact, has reacted sharply on the downside from the higher levels. And it has moved up recently quite a well. 2650 is going to be the resistance, and I'm expecting some more consolidation or a minor dip in the short to near term. I'm not expecting any bigger decline from here onwards. There may be a smaller consolidation as well.
All right, so that's the take coming in on Alcobev stocks. Some of the other counters that are in focus today, you have KEI Industries also that's in focus on back of its earnings. You've seen that stock also see a sharp rise, 3% up move coming in for that one. You also had Polycab that came out with their numbers as well, and let's see where the stock is at this point in time. We did speak to the management about their numbers as well as the prospects. There you go, the stock is actually eased from those elevated levels. What's your take, Deepan, on this entire space, the wires and cables space? Because yes, they've been in focus over the last 2 months on the fact that you have new competitors that are looking to enter into that entire arena. But what's your take? Looking at the numbers of Polycab, RR Kabel, or for the matter of fact, even KEI Industries, how do you think that this industry stands right now?
I think all the three listed players who have declared results on the cables and wire side have been very impressive. And clearly, they're benefiting from higher real estate activity and increased distribution, and electrifications could be caused by urban expansion of urban areas. And some of it is related also to the kind of diversified power producers which are coming in from solar as well as wind energy side. So underlying growth dynamics are good, but these stocks are fairly valued. Like KEI and Polycab are trading at about 43 times. For a largely industrial player, I think that's on the expensive side. And there, of course, is the looming competition, which may hamper the margins and may eat into the market shares as well. So, in my opinion, these stocks are pretty much well priced. And as a fresh investment, I'm not so sure. But given the kind of earnings momentum, I wouldn't want to sell also. So, from our view, all of these three companies one should be held on to, and no, not to increase positions or not to even exit them.
Dipan, Buffett, in perhaps his last AGM that he addressed publicly, talked about the forever companies while he was talking about Apple, Coca-Cola, American Express. Give me some color on what are the forever companies that you're advocating to your clients, which you have been holding through for the last decade or more.
Okay, we are entering into compliance-related territory and usual disclosures, but I've always said that the 10-year companies which we have held are only three come to mind, and one is Bajaj Finance, the second one is Tata Elxsi, and the third one is PI Industries, and fourth one is Eicher Motors. So all of these companies have delivered like anywhere from 30 to 70 times returns in the last 10 years. And we continue to hold them. I'm not sure they'll give those same kind of returns going ahead, but I think still the growth momentum is pretty good. I have no new stock ideas for that matter, which I think I want to hold for like forever, but something or the other will emerge.
Wow, so that's nice, and that's good to hear the names that you've given out actually at this point in time, Deepan. But are there any spots which you are trying to avoid at this point in time?
So I think that's the stocks to avoid are the software services companies. A lot of uncertainty over there, and with Trump tariffs and other uncertainties about their discretionary spends on tech may certainly affect their business. And on the whole, last 5-10 years have been pretty challenging, I think, for these companies, and we've seen stagnant profitability and growth. A lot of competition coming in from GCCs as well. So that's one sector we are avoiding. And we are just keeping a wait and watch on all export-oriented businesses, depending on how Trump tariffs play out. But other than that, I think we're pretty much positive on a whole host of sectors and stocks. It's just that this earnings season has been a tad bit disappointing, and various reasons, company specific, industry specific. But I do hope that all the kind of positive flips coming in through lower interest, lower taxes, better monsoon should play out and result in higher earnings growth. Because otherwise, the markets, they cannot rally from these levels. That's what my opinion is.
Quite interesting. That, of course, is the take on IT. But Kunal, you were of the belief that IT is finally getting into that oversold zone, and now you're going to see a big move come in these names. Are the charts still indicating that?
Yeah, very much. In fact, I would sense that maybe the worst for the IT stocks, at least looking at the short to medium term charts, I think is now over, because there was a point where the IT index was at 32,000 mark, where we flagged off that it's reached the extreme oversold territory. There was a lot of factors for the IT index. First, for example, the index was at an 8,000 to 9,000 point divergence from its 200-day moving averages. That's almost like a 20% divergence for an index, which is a very rare kind of a scenario when you look at this. And that too, the correction, or the major part of the correction, which had happened only in just the last 3 months prior to that. So that's one of the major reasons. And the other, then we looked at the factors where most of the large cap IT names, they were hugely oversold. And Infosys, HCL Tech, Tech Mahindra, etc. So there was a point where many of these IT stocks looked very lucrative. We've seen a point where over the last 1 month broadly, these IT stocks have rallied up 10% to 15%, from those points. So that, I believe, could be a strong indication that we are now into a zone where maybe the worst, at least in terms of the sharp reaction on the downside, could be behind. There could be a phase where these stocks may get into a pause, like what we are seeing right now, TechM at 1500 levels. Infosys also, I think, is showing signs of more of plateauing out. So the momentum is fading away, but I would still believe that there could be a chance that these stocks may first move up higher before they see any kind of a major consolidation.
Okay, so that's capacity coming in on the entire tech space, but let me get some closing ideas then. What's your closing trade, Nagraj?
Stocks. First one is Shriram Finance. The finance sector is looking good after a decent correction placed at the higher levels. This Shriram Finance as well after the correction placed at the support of 200 EMA and bounce back, currently placed at a moving above the gap resistance. Currently trading around 635. One can look to buy at this point of time. 670, 672 is going to be the next upside target, and one can place a stop loss at 620. And second one is from mid-cap space, Usha Martin. Usha Martin has been in a sharp downtrend over the last many months, lower tops and lower bottoms indicating, and which is the negative momentum in the stock price. Recently, it has formed a slightly higher bottom, and since then, it has been showing some confidence on the upper side. And currently trading around 306 level, one can look to buy at this point of time. Current price is 306.15, and the upside target would be around 330, 325 to 330 levels. One can place a stop loss at 295.
All right, so that's the closing trade coming in from Nagraj. What about you, Kunal?
So I'll go with Aarti Industries. That's a chart which I think we flagged off a couple of days back on the chart busters also, that the stock is heading towards a classical breakout. There's been strong indication from indicators as well as from the price front. So at current levels of 450 thereabouts, I think still looks attractive for a potential 5 to 7% on the upside swing.
Well, L&T is all set to report its numbers. Dipan, wanted to get your thoughts in very quickly on the entire construction and infra space before we let you go.
Actually, very positive, and I think L&T's numbers also should be very decent. The order inflow is what we will watch, and that's been quite impressive. So generally very positive on the engineering construction companies, and after a lull which we saw after the elections, we should see a good pickup in order inflow and execution.
Okay, Dipan, great to speak with you. As always, thanks for your time. In fact, let me take it across to Kanishka from our research as well and help understand what to expect from L&T numbers and what her poll is penciling in.
L&T is all set to announce its Q4 results for FY25, and all eyes are on execution and order inflow for the company. Now, as per our analyst poll, revenue expected to go up about 12% on a year-on-year basis to about 75,000 crore rupees. This is on the back of strong project ramp-ups in infrastructure and hydrocarbon segments. Now, execution momentum is also expected to have improved thanks to easing supply chain concerns. Now, EBITDA, on the other hand, is expected to come in around 8,040 crore levels, up about 11% on a year-on-year basis. However, margins, that could remain flattish around the 10.8% level as well, according to legacy fixed price contracts, which may weigh on profitability. Now, apart from that, order inflows, which is a very key metric, are projected to range between 80,000 crore to 1 lakh crore rupees, driven both by domestic and international orders, especially in hydrocarbon and transport infrastructure projects. The street will also very closely watch for the management commentary on FY26 guidance, its capex plan, especially in the private sector. Now, apart from that, commentary on global risks, tariff impact, geopolitical volatility, and commodity inflation is something that the street is watching out for.
All right, thank you so much for that, Kanishka. That's what we are expecting for L&T when they report their numbers. But on that note, we slip into a break on this edition of Closing Trades. When we come back, last half hour of the trading session. Welcome back. You're watching Closing Trades right here on ET. Now, if you look at the markets, yes, we are holding on to the positive territory. We've actually held out through the course of the day, no doubt. We've seen some sort of volatility creep in the initial hours of the trading session, but nevertheless, we are actually shutting or looking to shut above that 24,400 mark as of now. Certain stocks and sectors that are in focus today, yes, you have banks that have actually recovered. In fact, they're outperforming in today's trading session. The likes of Tata Motors is trading higher, 4.6% uptick for Tata Motors. Bajaj Finance, Shriram Finance, Jio Financials are the other set of gainers. Asian Paints, Sun Pharma, Bajaj Auto are the ones that are lagging in today's trading session. We also have Sudeep Bandyopadhyay joining us on the show right now. Very good afternoon to you, Sudeep. And how are you actually sort of gauging the entire market, the news flow that we are surrounded with at this point in time? No doubt you have the Operation Sindoor that sort of dominated the initial first 2 hours of the market trading. But then, yes, it looks like the focus now shifts back to tariffs and trade deals.
Absolutely right. I think we should also focus on that US-India FTA, which has been signed after a protracted, series of negotiations, and I think this augurs well for many industries. I mean, of course, we can talk about textiles, liquor, but many more industries will benefit directly or indirectly. It's a very, very, good step, and I think we are still not, because of Operation Sindhur's excitement, we are not getting too much into that, but that's a very good thing which have happened. There are, of course, a little bit of concern regarding US, Fed policy announcement today. I mean, the rates may not change, but the Fed chairman's comments will be very, very carefully studied. So the global markets will be watching that as well, as things unfold going forward. By and large, we have been positive on Indian markets and we maintain our positive stance. We do believe that this bit of geopolitical instability or uncertainty will pass. It's just a matter of time. Maybe next few days we will still have some kind of concerns and some excitement. But by and large, FIIs have started coming back to India and will continue to maintain the momentum.
Right. Okay, that's the take coming in right now. In fact, I'm going to quickly get on board Gaurav as well from our research desk, and he's been speaking with economists and bankers. Let's try and understand what the general opinion is out there in terms of what to expect from the FOMC meet.
Well, yes. Another global event to watch out for is the Fed's meeting, and let's not forget that in the last few days only Mr. Trump has said that Fed should go ahead and cut the interest rates. But when it comes to economists' expectation, what they're saying is that we may not see any kind of change in stance or in terms of interest rate from the FOMC meet in this meeting. And there are certain reasons why they believe that. First, when we talk about the entire event, what they're saying is that the commentary from Fed is going to be crucial, because in this meeting dot plot will not be updated, and as a result commentary is something which will drive the market. Other than that, what they're saying is that the focus will remain on the negotiation between US and non-US world trade related talks, because this will actually drive the market. What they're saying is that we've already seen that the business sentiment and the consumer sentiment has gone down in the USA because of the trade war which is going on, and as a result, when we talk about the expectations, now inflation is expected to remain somewhere in the range of 4 to 4.5%, while GDP growth is expected to slow down somewhere in the range of 0.5 to 1%. So on the back of all these events which are unveiling, they believe that Fed will remain cautious and they will keep their stance neutral and see what is going to happen in the coming days. But definitely in this meeting, they are not expecting any kind of rate change from the Fed, at least for now.
All right, thank you so much for that, Gaurav, for taking us through what we are expecting when you talk about the FOMC meet outcome. Remember, tonight you'll have the meet outcome, and for now it looks like they are going to hold on to the rates. Kunal, I wanted to get your views actually in some of the rate sensitive counters back home. Not linked to the FOMC rate decisions, but nevertheless, I wanted your views, especially when you talk about the realty space and the auto pack. If you have to stack up both of them, which one would you bet on?
So I think both of them. In fact, real estate pack, I would believe that they've shown clear signs of a major bottom or a support which has emerged into these stocks. Many of the stocks are looking extremely attractive. The volumes have started to pick up pace. Yes, the price actions have been a lot more volatile, but I would believe that that's a ingredient of these stocks forming bases for themselves and then building on to these bases as well as strong volumes to try and chart a trend for themselves. So I would be of the belief that many of the real estate stocks would do it. And for auto stocks, I think there are stronger evidences that the likes of Tata Motors, for example, that's a stock which I would believe is formed a classical bottom for itself. Especially at a point when the stock was at 550 mark, we flagged off that could be a very good zone for contra traders to try and go for a buy. I think even at current levels, when the news flow would start to improve for Tata Motors, I think there could be a significant upside which could be possible over the near term, at least till that point where the stock goes into that first retracement of its long-term averages, which should be at 720 to 750 mark.
Right, so that's the take coming in on the auto pack. In fact, let's actually talk about the cabinet meet, because you had the Prime Minister who chaired the CCS meeting and the cabinet meet as well today, and the outcome has been particularly positive for coal and power generation companies. Prakash is here to tell us what was discussed in the cabinet meet. Prakash?
Yeah, in a significant move, the Union Cabinet has decided to provide some sort of relief to the thermal power generation companies. In fact, that's given a nod to revise Shakti policy for allocation of coal to thermal power plants. So that's an important development coming in, as the decision has potential to help these companies securing coal linkages on easy terms. Essentially, the cabinet has given its nod to two mechanisms. Under first mechanism, the power generation comes under central sector, or state governments will continue to get coal linkages at notified price. Of course, it will include joint venture and subsidiaries of these companies. In a second move, the Indian cabinet has decided to provide coal linkages to any domestic coal-based power plants having a PPA. Along with that, imported coal-based power plants will also get coal linkages coal linkages at notified price for a period of up to 12 months on auction basis. These power plants can get coal linkages beyond 12 months, but up to 25 years by paying premium at above the notified prices. That's an important development coming in. Along with that, these companies have been given flexibility to sell electricity as per their choices. Of course, these are positive development for the thermal power generation companies, and the Coal India will be given necessary instructions to implement these mechanisms going forward.
Right, okay. In fact, let's also hear it out from consulting editor Swaminathan Nair as to what he's making of this current situation.
Know for sure that Pakistan is going to hit back. Pakistan will be tempted to hit back just as deeply as we penetrated. Let us be prepared for this, and let us, at least we have the chance to say, let us get our anti-drone operations systems working. Let us see what that happens. There are dangers ahead. I think they will avoid hitting any major cities. I think they will avoid hitting any military installations. But they have a very large number of things that they can target. We have such a long border. I mean, somebody from Gift City. I mean, even Ahmedabad even Gift City is not that far away from the Pakistan side. So they have targets all the way from Kutch, all the way into Punjab, which they could target. And there are very large, I do not think they will go for something as critical as a power station or an oil refinery. I do not think they will try to target our oil fields in Bombay High. I do not think they will go for really critical, I don't think they will try to bomb our dams like Bhakra Nangal or so on.
Right. So that's the take coming in from Swaminathan Iyer. Let me come back to you, Sudeep, and get your view on some of these counters that are actually moving in trade today, and one of them being the entire payments segment, and Paytm case in point, given the fact the good strong earnings coming in, the brokerages are bullish on this one. Now it is trading in excess of about 7% or so. How are you liking this entire payments theme or space, and also Paytm, if you can talk about it?
As far as Paytm is concerned, though they declared a loss this quarter, I think it was on account of a one-time ESOP related expense. So, ignoring that, I think they are there in terms of profitability. So it's a fantastic thing to have happened after such a long time. Paytm finally is operationally and at even PAT, PBT level becoming profitable. That's an excellent news. I think the excitement also is around the expected change in MDR. While MDR is there on other kind of payments, but on UPI, MDR is still not there. And they are expecting that to happen sometime sooner than later. And this creates the excitement around the Paytm stock. And I think overall payment space will get a leg up if there is some kind of MDR introduced on the UPI payments, which has been the demand for the industry for quite some time. And end of the day, I think it's fair also. Some kind of nominal charge, even if it's introduced, I think it will benefit the industry in a big way. As far as Paytm is concerned, while it's not a cheap stock even at current levels, from a long-term perspective, now Paytm looks interesting.
Okay, Paytm looking interesting right now. I don't know if we have, we do have Nagaraj. Nagaraj, what's your own sense of, how Paytm has actually moved from those 400, 420 thereabout levels all the way to the current 870, and what lies ahead now for the stock trend?
I think the recent downward correction in the Paytm seems to be over as 808 levels, where Nifty, so where the stock has reacted very well on the upside. the overall chart pattern is looking positive. I'm expecting further upside momentum to begin this stock currently placed at the upside breakout of around 870, 880 levels. So 920, 925 is going to be the next resistance to be watched for the stocks for the near term.
All right, so that's the take coming in on Paytm, and that one is looking on the chart. Kunal, how is SBI Card looking to you? Because this one also has been news of late after its earnings, and also the fact that you had the credit card data also coming in. Today the stock is trading higher by about 2.8% or so. How is this one looking? Do you think that there is some sort of interest coming back in this one?
Yeah, definitely it is. And in fact, over the last 5 months, the stock has risen up quite well from I think 670, 75, which was the low for SBI cards, to now 900 plus. Yes, in the last 1 month, there has been slight bit of volatility which has come back into SBI cards. The stock dipped down towards I think 770, 775, and then managed to come back very swiftly about the 850 levels. So I think except for that one phase where the stock was very, very volatile, we've seen over the last 5 months the stock to be a lot more steady. Now, interestingly, the stock has come back to the last 2 years of swing highs, trading at 900 plus mark. That I believe is a very strong indicator that the stock is restarting or resetting its major downtrending cycle, because something which started off in 2021-22, where the stock went through a corrective phase. There was a pattern of lows and lower lows. That pattern is getting challenged now for SBI cards, and that too on the back of volumes as well as consistency of price action. So that I believe could be a very strong indicator or a precursor that the stock is restarting its uptrend. I would believe long-term traders, long-term investors should look at the stock, because more the volume built up, more the consistency in the stock price, more the chances that the stock would trend for a prolonged period of time on the upside.
There's Bharat Forge, there's IIFL, Piramal Enterprises. All these stocks are seeing a fair amount of buoyancy. And then, of course, I want to check in on Avenue Supermart as well, because, the street has been pretty split and divided post its numbers. While that day, of course, that gap down in the stock got bought into. But you've got another upgrade coming in from HSBC, downgrading it to a reduce now from the earlier hold. And the target prices have been cut all the way back to those 3,500 levels, from where I think the stock began its recovery. From the current 4,500 thereabouts. It's already sub that 4,000 mark. That's Avenue Supermart. Sudeep, how are you now analyzing the prospects for Avenue Supermart? I mean, the competition from QCom, that's been there for many quarters. The management has been very forthright in, setting out a warning bell also on that. But wouldn't you think that the damage is already in the price for the stock?
Well, damage to an extent is in the price, but look, Aisha, it's not a cheap stock even now. And, the margin is continuously under pressure. And the way I look at it, margins will continue to remain under pressure for the foreseeable future. The way the Q-commerce market is growing, the way the competition is intensifying, amongst the Q-commerce players, as well as the Q-commerce with the brick and mortar retailers. So the margin improvement possibility, in the short, medium term is not there. Under the circumstances, at a current valuation, I think I'll keep waiting and watching. I don't think I will recommend a buy at current levels.
Right, so that's the take coming on Avenue Supermart. On the chart, how is Avenue Supermart and Trent looking to you, Nagaraj?
Yeah, DMart is looking quite a weak. Recently, we have seen some good correction from the higher levels, and still there is no indication of any clear reversal signal on the upside bounce. Still weak. Some more consolidation is likely. Some more weakness is likely down to 3,800 levels, which is the immediate support from here onwards.
Right. And what about Trent?
Yeah. Trent is not showing any strength to bounce back strongly, showing a larger range-bound action. 5,500 has been a strong resistance, showing a range action below the resistance area. I'm not expecting any bigger up move is there at this point of time. More consolidation, range-bound action is likely in the near term. Immediately around 4,800 is going to be the support for the stocks on any dips from here.
To have you on the show. Thanks as always for your time. Kunal, what about your BTST ideas?
So I'll go with Samvardhana Motherson as the first stock which I would recommend as a buy. The stock for the first time I think is looking extremely attractive in terms of a potential breakout above 140 levels. So buy with a target of 150, stop loss at 137. And the second would be a buy in Muthoot Finance, and this stock is making a comeback of sorts after taking a pause for the last 1.5 odd month. bouncing off from its 50-day moving average. So buy with a target of 23.75, stop loss at 22.70.
Right, so those are the BTST ideas coming in from Kunal. Let's talk about Titan and put the spotlight on that particular counter, because Titan will also be reporting its numbers tomorrow. We have Snehi to tell us what the street is anticipating when you talk about Titan's Q4 numbers. Snehi.
Well, yes, a good quarter four is what we're expecting from Titan. Remember, even when the company came out with its quarter four updates, they looked like a good set of updates. On the standalone year-on-year basis, revenue is seen at 13,071 crores and 16% year on year. EBITDA expected to go up by 17% YOY at 1,296 crores. Net profit also expected to go up by anywhere between 5 and 5.5% on a year on year basis at 828 odd crore mark. EBITDA margin, here we are expecting to see some pressure. We are penciling in this figure to be at 9.9% compared to 11% on a year on year basis. Some key expectations: the core jewelry EBIT margins could be impacted by high marketing costs. High single digit same store sales growth is what we are expecting to see. And they're also expecting a rise in finance costs given an increase in the GML, which is the gold metal loans rate for most jewelry companies, that has gone up. Remember, for Titan, this rate has increased to 4% now from 2.5% earlier. So this may have an impact on the quarter four PAT. Store addition, they've added 55 stores in quarter four, bringing the total now to 2,989. Remember, in the quarter four update, they have said that growth in quarter four they're expecting to be at 25% and overall FY25 growth at 21%. Overall growth for jewelry at 25%. Watches at 22%, eye care at 19%, emerging businesses at 7%, and Carrot Lane at 22% is what they have penciled in. Key factors to watch out for when the numbers come out: any outlook on gold and diamond prices, Philip from the wedding season, if they've seen how this has impacted the quarter positively, if at all, demand trends, profitability across segments, and competitive intensity and product mix is going to be important to watch out for. So keep an eye on Titan when its numbers come out, but we're expecting a good set of quarter four numbers from Titan.
Okay, but is that the case for Asian Paints as well, given again fierce competition within the sector? Rabinder is here with his poll on what to expect from Asian Paints.
Well, yes, Asian Paint is set to announce its Q4 FY25 number, and the street is expecting a revenue at Rs 8,612 crore, reflecting a slight decline of 1.5% year-on-year basis. And if we talk about PAT, then a PAT is estimated at Rs 1,085 crore, marking a sharper drop of 13.5% year-on-year basis. And EBITDA is projected at Rs 1,565 crore, down by 7.5% year-on-year basis. So overall, street is expecting a muted Q4 number from Asian Paint. And if we look at the factors, then the decorative paints volume growth will be 4 to 5% as demand condition remains subdued, and the impact of rising competition was less, and the larger impact was due to weak industry demand. And benefit of 2 to 3% price hike at the end of Q2 is expected to be reflected in Q4 with a lower volume and value gap, and the demand remains challenging in urban while rural shall continue to improve gradually. And lastly, management commentary on outlook of industry demand revival, volume growth, and pricing competitive intensity and outlook for FY26 will be key monitorable.
Right, Sudeep, this is a space that has actually been hit because of competition. That's the entire paint space. How are you looking at this one? Asian Paints has not given much of a return. This one has been pretty disappointing one as well.
Well, I think the issue of competition is real. Suddenly, I think Asian Paints have been besieged by competition, whether it's a Grasim or even the other players who have entered in the recent past, whether it's Indigo, whether it's Jindal Group. So competition is real, and competition is the silver lining as far as the current market scenario is concerned. The oil prices coming down significantly is definitely a big positive for the entire paint industry. We know about 50% of the raw material cost is accounted for by crude oil prices, and crude oil prices coming down definitely augurs well as far as the margin and the P&L is concerned for the paint companies. So while relatively comparing with other paint companies, the market share loss will be real, but the margins going forward may improve as long as the oil prices remain subdued. That's what as far as Asian Paints is concerned. But it's a question of buying paint companies. I would refrain from that because, as you said, competition is intense and market share hasn't really settled yet. It'll take some more time before we know where things settle.
Kunal, what's your take on paints and specifically on Asian paints? You think 2300 is a good buying price?
Yeah, maybe I think post results, we may probably get the stock, in case if we get it, a bit lower, then I believe that that could be a good level for the stock to buy, because, what we've actually seen the stock in the last one and a half odd month forming a classical base at the 2150, 2200 levels. From there, the volumes have started to increase for Asian paints. The indicators have started to reverse for the stock price. It's now bouncing off or touching back its 50-day moving average. So I think if the stock bounces back, say post the numbers from this 50-day moving average level, this could be a very strong indicator further that the stock has formed a higher low for itself. So I generally wait out for the results to pan out, because that's the event risk for the stock. Once that is out of the play, then I believe that the charts look a lot more cleaner as well as better for the stock prices. So maybe at 2300 levels thereabout, I think the stock stabilizes post result. That could be a good buying zone.
Right, so that's the take coming in on Asian Paints. Let's take a look at some of the other counters. They are reacting to the number. MRF also is one of them, where you had the quarterly profits actually beat analyst estimates. So on back of that, you had MRF that's soaring in trade today, 4% higher for coming in for MRF. On the other hand, you also have Piramal Enterprises, higher AUM guidance coming in for that one. You have CLSA that has upgraded the stock seeing a jump of approximately 7.5% as we speak. You also have Tamil Nadu Petro Products that's come up with the numbers. You have other housing also that's come up with the numbers. In fact, that one is declining in trade. This lower margins is what has caused a concern in the analyst community. So there you go. Other housing is down about 2.3%. On the other hand, Angel One, that one is gaining in trade today, because you have the April client base that has risen. So that one is seeing an uptick of about approximately 4% as we speak. But earlier in the day, we spoke to Vallabh Bhanshali, who is the chairman of Inam Group, and he believes that all sectors will grow rotationally in the next 10 to 15 years. He also believes that India is a growth story for next 30 years and advises to buy good companies in any sector. Listen in.
I think all sectors will rotationally grow in the next 10, 15 years. We have seen amazing recovery in, say, cement sector. We have seen health sector, become so large. New sectors like data centers, etc., are, knocking on the door. So, and they are characteristically new kind of infrastructure. So infrastructure as a play. It can cover road building, it can cover EPC, it can cover equipment, so on. So I think India is a growth story for the next 30 years. And, if you can keep growing at 8, 9, 10, 11% nominally, it is inevitable that, as is very well known, that when economy starts moving, how the hard things move first, soft things follow, and then, the tertiary sector of beauty, cosmetics, services, travel, all of them follow. So I think this rotational move is here to stay. Buy good companies in any sector is what our philosophy is.
Okay, that's the view coming in from Vallabh Bhanshali. Sudeep, before we let you go, where is it that you see the next big move coming in sectorally?
Well, I think one segment where I have been positive for quite some time, but this tariff issue is confusing, is the chemicals and specialty chemical. I think this space is poised for very good growth. This was a completely bombed out sector for last couple of years. But things have stabilized there. Demand has come back. And of course, the China Plus One story continues to remain strong. The only challenge is the tariff thing. Once tariff thing settles down, and we expect that to happen, I think this is one sector where if you're an aggressive investor, you should definitely look at. You can look at the leading chemicals and agrochemical and specialty chemical companies, whether it's an SRF, whether it's a Aarti Industries, whether it's a FACT. I think all these, or even UPL. All these stocks at current levels do look good from a long-term point of view, but you have to withstand some amount of volatility on account of this tariff issue.
All right, so that's the take coming in on those counters. But on that note, thank you so much, Sudeep, as well as Kunal, for joining us on the show and talking about markets and the stocks that are actually moving in trade today. And as of today, we're looking like we're going to shut shop above that 24,400 mark, and we have Snehi standing by to take us through the market close. Snehi.
Absolutely, Cheryl. Does look like we're poised to close above the 24,400 mark. Let's see, last 3 minutes of trade left. Let's see if we can hold on to that mark, because over the course of the day, markets have been quite floppy, because for most part of the day, we've been in the red. At one point, we were even struggling to hold on to the 23,350 mark. So this 24,410, 415 print looks rather positive from the day's lowest point. A 0.1% uptick coming in on Nifty. That's what we're seeing right now. Sensex also absolutely in tandem with the Nifty, a 0.1% uptick coming in over there as well. But we've gone up higher from the levels of 80,500, where we were holding on to the entire day, 80,750 thereabouts on the Sensex right now. Advance decline ratio has managed to turn into the favor of the advances right now, just towards market low, so that is looking good. India Wix, a 0.2% cut coming in on India. Remember, we were at one point trading with a 2% uptick here, but this has cooled off. We're around the 19 mark, but below that for now. Nifty Bank has done pretty well compared to the Nifty and Sensex. Nifty Bank is up almost 6th or 7th or 10th of a percent. 0.7% uptick coming in, looking comfortable above the 54,600 mark. But it's really been the broader markets today that have led the rally when it comes to the overall market move, to whatever little extent that is, because you have the mid-cap index that was up 1.6%. Small-cap index has also done similarly in today's trade. Small cap index also up 1.5%. Let's take a look at some important gainers and losers that were in focus in today's trading session. First, from the Nifty pack, let's talk about Tata Motors. This stock was in focus today on the back of multiple reasons. First, the FTA being signed between UK and India, and that is a big fillip coming into JLR. So positive for Tata Motors over there. And secondly, the shareholders have approved the demerger of the CV business into a separately listed entity. Two positive factors coming in for Tata Motors. Top Nifty gainer, percent uptick coming in on that front. You have Shriram Finance, Bajaj Finance, Eternal, which is Zomato, that has come back to the green today. Jio Financial, M&M, Coal India, Adani Ports. These have been the stocks that have aided the Nifty today. On the flip side, continued pressure from Asian Paints ahead of its numbers. The numbers are tomorrow. 3.5% cut is what we've seen on the stock today. Sun Pharma, Reliance, Bajaj Auto, Grasim, ITC, all of them trading with cuts of 1%. Sectorally, let's take a look at what the shape of the market has looked like today. It's been a day of auto. Nifty auto stocks, of course, powered by Tata Motors, but other than that, you also had Bharat Forge, Ashok Leyland, Biokrishna Industries, M&M, Exide. All of these stocks have done well on the back of the UK FTA being signed. Followed by that, you had realty, media, metal, energy, bank, PSU banks and IT. All of these sectors have ended in the green from most to least gainers in that order. On the flip side, you have Nifty, FMCG and Pharma, two sectors that have been in the red ever since the get-go. So some pressure seen on names like ITC, Nestle, Tata Consumer, Britannia. Remember, Godrej Consumer also absolutely flat after a mixed set of numbers coming in for Q4. Let's talk about some other stocks that were in focus today. Gokuldas Exports, Arvind Limited, textile stocks impacted positively on the back of that FTA. So those stocks were doing well. In fact, Gokuldas up almost 12% as we speak. Arvind has also done pretty well, 2.5% uptick coming over there. Paytm on the back of very positive numbers. So that is something that has worked out. Paytm has also done phenomenally well. At one point was up 10%, 7% gain for Paytm right now. Other than that, DMart and HSBC downgrade coming in. BSE good set of numbers. KEI Industries strong numbers. And NLC on the back of a collaboration coming in, NLC India. So all of these stocks were in focus today. But overall, it seems to have been a pretty okay day for us. We've ended absolutely flat. We'll give the rates some time to settle. But for now, at least prima facie, it looks like we have closed above the 24,400 mark. So well, yes, that's what the market breadth has been like today. And that's how we've shut shop for the day.